Hello everyone, welcome to our Egyptian Online Seminar group. First, keep your microphones off. Then, if you have any questions, you can ask our speaker during his presentation or after his presentation. I have great pleasure of welcoming Professor Robert Bloomfield. Robert Bloomfield is one of the top accounting thought leaders in the world. He is a professor of management and the professor of accounting at Cornell University. Professor Robert Bloomfield has used laboratory experiments to study financial markets and investor behavior and has also published in all major business disciplines, including finance, accounting, marketing, organizations behavior, and operations research. Professor Bloomfield has recently taken on editorialship of Journal of Financial Reporting, and he is the Johnson School's faculty director of e-learning. He is the author of the winning ebooks, What Counts and What Get Counted. Now we will start our seminar with Professor Robert Bloomfield.
Thanks so much, Mohamed. This is really a pleasure to do, and it's great to see we have a lot of people joining. Good morning or afternoon or evening, depending on where you are. This is my first public talk on moral accounting, so I'm really looking forward to hearing your comments and questions. And I want to point out this is very much a work in progress. So I posted slides. I'm going to paste this link in for those of you who just joined. I posted my slides on a blog that I've created, the Moral Accounting Working Group, and I've put a clickable link in the chat. I've split this talk up into 6 sections. And each one is pretty short. So here's how I'm hoping to run things. I've asked Mohamed to open up the chat, and feel free to chat at any time, ask questions, comments, respond to others. I won't mind at all if you're going back and forth in the chat while I'm talking. That's how I teach online, and it works pretty well. If you want to ask questions in voice, I'd prefer that you wait till the end of each section. So they're fairly short. I will run through, 5, 6, 7 slides, and then open it up to Q&A. I have lots of questions too. Okay, so before I start, I want to introduce 2 great colleagues from Lehigh University, Tamara Lambert and Marietta Pecheva. And I guess I don't, let's see, I see Marietta. I don't know that I see Tamara yet. Maybe she just has her camera off, but I really couldn't have done this project without them. They've been keeping me on track and keeping me from going down rabbit holes in the paper that I'm going to be talking about. And we're also working together on empirical research, and they may be piping up to help me moderate the conversation. Okay, so I want to start by emphasizing the opportunities moral accounting provides. And for our profession, first, think of this as a new line of services that accountants can offer, a way to help clients address moral accountability failures. Good accountability systems hold people to a code of conduct. And large corporations, governments have really powerful systems to do this. But what if a business fires someone for looking out for the social good instead of focusing entirely on profit? In that case, we're saying they're using their systems to enforce a code of conduct that is immoral. And that's one type of accountability failure. The other type is a problem with how we hold people accountable. For example, Amazon is in the news this week for allegations that they're forcing their workers to urinate in bottles. There's nothing immoral about a code of conduct that says, be efficient at your job. But if they're punishing people for normal and unavoidable bodily functions, they're demanding the impossible. And there is something immoral about that. Fixing these 2 types of accountability failures is like a mix of corporate social responsibility a CSR audit, and an internal controls audit. So I call it a moral accounting engagement, or MAE. Like CSR audits, we're looking at the social impact of the accountability system. Are they enforcing a moral code of conduct and doing so in a moral way? But the actual process is more like an internal control audit, because we're documenting the accountability system itself, not just its impact. Next, there are the research opportunities, and there are lots of them. I make a number of claims about moral accounting that could be tested empirically. First, I argue that a moral accounting engagement is feasible, that we can do it and that we can agree on the results. That's actually a host of testable claims, because every little feature of an MAE and its process could be examined and improved. I also claim that the conceptual framework for moral accounting is flexible enough to accommodate just about any moral framework. And along with that, I present a set of moral accountability principles, the MAP, that you need to live up to if you're to hold people accountable in a moral way. And I claim that those principles are universal as well. These are both testable claims. I also claim that the structure of a moral accountability engagement makes it easier for people to come to a consensus, because it focuses them on the accountability systems rather than on moral character. That's testable too, and later on I'll talk about how I'm trying to test that with Tamara Lambert and Marietta Pecheva. Finally, I argue that we can have a comprehensive system of moral accounting without worrying about people's intentions. Instead, we can just focus on what people do and how they are held accountable. And again, that is testable. So I just wanted to lay out those opportunities before going any further, and I'll pause for a minute now to see if anyone has any questions. And again, you can raise your hand, you can just pipe up, and you can type in chat, as V Singer has done. How about looking inside and making the publication process in accounting more moral? It's not totally broken, but can clearly improve in terms of fairness and morality. Yes, and I would say, as part of morality, I'm just reading between the lines here. There are some people who complain that the process is not an objective one, the selection process, and maybe Zvi, that's what you are thinking of. That there's clubbiness and favoritism, cronyism, whatever you want to call it. That is definitely a concern, and exactly the type of thing moral accounting could be used to address. The other side of it is, sort of the research reliability. We have issues with, p-hacking and harking, and I'm gonna, that's something that I've actually written quite a bit about, and you can see some of that in the paper and on the blog. But my basic idea is that if you're worried that our research is not reproducible, that people are cherry picking results, all of that, I'll just go back to one of the points I made. Moral accounting is not about character. It's about accountability systems. And so what you end up doing is focusing on, well, what are we doing within our editorial process that holds people accountable for questionable research practices? That's really a big deal. Okay, more questions coming in. Jennifer, where does social justice and equity fit into the MAP framework? That's a great question. One of the big challenges that I'm going to be talking about is splitting the moral accounting aspect of things from the moral philosophy or ethics. And, I'm going to be saying, look, we are not experts in, just to take, for example, social justice. There are a lot of controversial issues in social justice, controversial not just because people have different interests and all of that, but because philosophers, ethicists disagree about this stuff. And so absolutely social justice and equity are going to figure into moral accounting, but to a large extent will be deferring some of the most heated issues to people who are experts in that type of thing. And what moral accounting is going to do is nibble around the edges a little more and say, well, what can accountants do to address these issues? And so I'll be elaborating on that throughout the session. Does the implied universality of moral accounting contradict being able to ignore intent? Don't at least some moral systems take intent into account? Absolutely. So one of the things that that I emphasize in the paper, and I'm not actually going to talk about so much in this talk, is that well, it goes back to carving out, what's our part versus what's the ethics part. We want to create a conceptual framework that is going to accommodate any type of ethics. And it will, the system, I believe, does accommodate intent. It just doesn't use it. But so there's a question, right? Question one is, what is moral? And that may involve intent, and the ethicists are going to bring that into the moral books, as I'll talk about later. But the accountants just start with the moral books and don't have to worry about intent thereafter. Let's see. Matthew Soy, I don't know if I'm pronouncing that right. Should we first reintroduce the label morality into economics education? One of the things that I've found really interesting in this project is how little accountants use moral language in its moral sense. So we're very reluctant to talk about things like, for example, fairness and equity. I mean, we will go immediately, we won't talk about them in their moral sense. We might talk about them in their economic sense. And that is really one of the questions I've gotten repeatedly is of the form, well, can't you do this without using the words of morality? Is that a battle you want to fight? And the answer, my answer is yes, it is. And the big reason is that morality is our highest aspiration. And when we shy away from moral language, we're basically lowering our aspiration. And let's talk about, for example, the typical approach to corporate social responsibility, which very quickly becomes a conversation about the bottom line, right? The argument is not, and I'm thinking about what's been going on in the US lately with a bunch of corporations speaking up about racism and, more recently, discrimination against Asians. And the argument quickly becomes, well, this is good for our bottom line, right? It's in the short run, it may cost us something and not give us anything, but in the long run, it's a wise business decision to look out for human rights and justice and equity, to look out for the environment and so on. Well, that's all well and good, but it's a limited aspiration because if it isn't going to help your bottom line, then you don't have an argument for doing it. So one of my goals in using moral language is to address that issue. Jennifer has another one. If you're high on CSR, corporate social responsibility, but low on social justice, do you get to trade off? I think the aspiration of moral accounting would be no, unless they conflict. And, I'm going to talk, the next section is all about aspiration, but I think it's worth highlighting this a bit more. each individual principle that I'm going to present in moral accounting is an aspiration. It's a lot like the conceptual framework and the desirable qualities of financial reporting that you see in the FASB and IASB. We want things to be reliable and we want them to be relevant. Those are, you can never be too reliable, or maybe you can say you can never be reliable enough. It's something we aspire to, and the same with relevance. The only time we say, oh, that's too much reliability, is when what we really mean is pursuing reliability means we're giving up relevance. And so if you have that a conflict between principles, you need to make trade-offs, but otherwise, right, the goal is to aspire on all fronts at once. And let's see, Teresa Libby makes an interesting point. We try to separate morality from ethics and accounting research, and people come with morals, but then their behavior, what they do, can be more or less ethical. So I view this slightly differently. First, and I would love, Teresa, if you have literature to look at, I would love this. As far as I can tell, people who see, there are a lot of people who feel very strongly that there's a difference between morality and ethics, but they all seem to come up with slightly different distinctions. And there are a bunch of people who say, no, there really isn't a difference. I've been puzzling over that. But I've been highlighting a different distinction, which I think is much more useful, which is between accountability systems and character. And one of the things I'll be talking about at length today is we're going to do very little with character. We're going to try to keep character out of the equation because it's unobservable. There's a philosopher here at Cornell, John Doris, who thinks it doesn't even exist. And to the extent that it does exist, by definition, it's a persistent feature of a person that is difficult to change. And so, it's much easier to change behavior with accountability systems, which we can also observe much more easily. Wow, there are lots of questions, and maybe I won't get to section 2 because these are great, but I'll just quickly can we consider moral accounting as synonymous to CSR, similar, more aspirational, and more focus on process by how you achieve your social goals, and same with ESG. I'm going to talk about opportunism and self-interest in a bit. And Steve Salterio makes an excellent comment about moral relativism. That's the last topic I'm going to address today, but since it always comes up, let me say a couple words about this right now, which is I prefer the term localism to relativism. And our goal, every society has its own morality. And, there are philosophers who think, no, that's impossible. There's only one true moral code. But from a practical perspective, we just have to be humble and deferential when we are accountants coming in to make the world a better place. Well, we can't substitute our own morality for society's morality. And what we really need to be doing on the localism front is to be distinguishing between practices that are truly viewed as moral, as aspirational, or things that happen frequently that are just tolerated, or things that happen because people with power make them happen and everyone thinks and pretty much knows they're wrong, but they do them anyway. When you think about something like IBM in Germany pre-World War II, that is the way I would be thinking about it. And what is the point of pursuing reliability of irrelevant information? Good point. I will leave that though to that's, not so much a moral accounting issue, and I was probably just a bit sloppy in my discussion of the framework, conceptual frameworks. And we
have a hand up, Rob.
Oh, we have a hand. Oh, okay. Timothy Shields.
Sorry, trying to find the unmute button. It seems like a dilemma for defining morality is always, and you've touched upon this, defined at a fairly local level. And you had a slide that says you want to make this universal, and I guess I'm kind of curious how we plan on doing that. I teach ethics and been reading Josh Green and Jonathan Haidt, and one of the issues we have in the world is defining absolute moral systems, because we have different groups come together and have different definitions of what it means to be moral or what it means to act ethically. And when those two groups interact, we don't have a common set of moral definitions to judge each other by.
Mm-hmm. Yep, great point. So yeah, John Haidt's work, for those of you who don't know it, I would say sort of his big claim that I'm going to spring off, because I think it's most relevant to Tim's comment, is that there are these so-called individualizing values like fairness and benevolence that allow individuals to thrive in society. And there are binding values like loyalty and deference to authority that bind a society together. And what Haidt and the co-authors argue, and I've found this in my own work as well, is that conservatives care far more about the binding values than liberals do. What is different about the approach I'm taking is that, look, conservatives and liberals are in the same society. Like, if you wanted to think of them each as their own little society, right? The way I'm going to be framing this is the world is filled with a million societies and they overlap. And just like, the FASB and IASB need to converge their accounting standards, if we want to deal with a society that is actually a mix of societies, we need some converged standards that are, and that's tough. That's tough, and that's not the accountant's job, right? That's the job of the moral philosopher or ethicist or whatever. As far as universality, the claims that I'm going to be making, I say, are universal, are things like, let's hold people morally accountable in proportion to their moral performance. Let the punishment fit the crime. And what I'm going to argue is that in general, when we talk about this as a principle, that everyone buys that I don't see many people out there arguing, oh, we should punish people far more severely than is appropriate for their crime. It just doesn't really, it's not something people argue. They might argue that a very severe punishment is proportional. Okay, but they're not arguing for disproportionality. So you have universalism in the principles, but localism in the application. Okay.
So you don't think we have at least some localism in what we define as a crime? I can imagine
no,
two communities, ones that has property rights, one that uses some kind of commons, and they get together to incorporate on a new, and they're going to judge each other under different moral lens. And that seems to be the difficulty.
Yeah, and that's why I say localism in the application, right? So if you think about the two parts I've said, it's holding people to a moral code of conduct and doing so in a moral way. The doing so in a moral way is the particularly universal part, whereas defining moral conduct is very local, and that's where we need to, the way I'm going to be talking about it is that everyone has moral books, Yeah, everyone is a steward on behalf of their society, and society determines the accounting standards that recognize their assets and the obligations that go with those assets. And then the accountants can come in, but it's the local society really that is going to determine their, what their assets and obligations are. And I'm going to be talking about that more shortly. So I think at this point, I'm going to go press onward. Okay, and Sudipta talks about principles versus rules. Let me put that off for a bit. And as I go into this next slide, let me also say, if you guys want to go back and forth in the chat, my hope is to capture the chat at the end and find some useful stuff in there. And by the way, for anyone who came in a bit late, I'll just paste this in again about the slides being available. They have, by the way, I hope I'm engaging enough because I'm pretty much just following my prepared remarks, except for the Q&A. So if you read the slides, you'll see, they're pretty complete. Okay, let me talk about background and aspiration. And I think aspiration is going to also speak to, I've talked about that a little, and it's going to address some of these questions as well. So I see moral accounting not just as an opportunity, but as an aspiration for what accounting can and should be. And let me give you just a little background. This is my pandemic baby. I started this about a year ago in early March 2020. My wife was scheduled to spend 1 week in Pittsburgh to handle a short little gap in daycare for our grandkids. And as you might guess, a week stretched into 3 months, leaving me isolated in an empty home. And that gave me a lot of time to think. While what was going outside in the US and around the world gave me lots of inspiration. The pandemic itself highlighted a couple fundamental questions of both ethics and accounting. What do we owe to one another? And how do we hold people accountable for their obligations? Are we obligated to stay home or wear a mask when we go out? And if so, how do we make that happen? And then we had the killing of George Floyd, yet another Black man, by a white police officer, and all the ensuing protests, which raised similar questions. What obligations do police have to de-escalate conflict? How do we hold them accountable? And to me, these seemed like moral questions, but they also seemed like accounting questions. And that line of thinking led me to really the first and fundamental insight into moral accounting, which is that there isn't nearly as much of a separation between morality and accounting as we tend to think. A big chunk of managerial accounting is dedicated to the question, how can we get people to work harder? And we usually think of hard work as a business imperative, but hard work can also be seen as a moral imperative. Think of the Protestant work ethic. Does that change how managerial accountants should encourage hard work? I don't think it does. The same tools we use to improve business performance, we can use and do use to improve moral performance. Once we see this link between accounting and morality, we can be a lot more ambitious than we typically are as researchers and as a profession about making the world a better place with our own work. And that's my next big goal in this talk, is to encourage you to be more aspirational and to show how moral accounting itself spells out what those aspirations should be. So our first step is to define traditional accounting. Most definitions don't seem very satisfying to me. This one from Wikipedia is typical because it views accounting and financial reporting as synonyms. They exclude tying reports to incentives or implementing internal controls and a whole host of other like organizational design issues that you find in just about every managerial accounting textbook. So to me, that's way too narrow. Editors and reviewers also seem to adopt very narrow definitions of accounting as well. You know, they may not tell us what they are, but we know they're narrow when they reject research because this isn't accounting. That's what happened to Ball and Brown 1968 at the Accounting Review, one of the most influential and cited papers in accounting research in the last half century. And I bet many of you have a story like that with a paper that's maybe not so illustrious. But my favorite story is about a paper that actually got published. Christensen, Floyd, Yaolu, and Maffett presented work at the JAE conference a couple years ago, showing that mining safety incidents were reduced by a provision in Dodd-Frank that required firms to disclose those incidents in the 10K. And of course, in the conversation, you had the usual concerns about causality and robustness and p-values and R squared. But a lot of the conversation was, is this really accounting? Why should we care? And think about this for a minute. Here's a paper literally showing that we can save lives with a minor addition to what's included in the most central accounting report in the US, right? A corporation's annual report. And for a lot of people, their big concern is this our domain? And people wonder why accounting research gets ignored. We can aspire to more than this. Now, at the other extreme, we have very broad definitions of accounting, like Anthony Hopwood's, which basically amounts to accounting is what accountants do. And that's not very helpful either. Sure, accounting changes all the time, and we want to avoid ruling out what accountants might do tomorrow. But we need some sort of boundary. You know, accountants very often become deans. In the US, look at Shrikant Datar, Mark Nelson, Doug Shackelford, Frank Hodge, but that doesn't mean deaning is accounting. But Hopwood gives us a really helpful starting point, and this is the one I use, which is that accounting isn't a science or an art or a theory, it's a craft. It involves making something that has a practical purpose and that requires skill, like, you know, making shoes. Hopwood sort of throws up his hands at that point, saying that accounting is a craft that has no essence. But I think we can do better than that. The things we make are accountability systems. They're webs of reports and incentives and controls that shape performance. Reports offer information, incentives tie reports to reward and punishment, controls make some things easier or other things harder, and the practical goal of this craft is to improve performance according to some code of conduct, something that spells out what is good and what is bad performance. Our systems change, and so do our codes of conduct, but we're still crafting accountability systems to improve performance. So now let's define moral accounting. Again, this is a matter of aspiration. If we're crafting accountability systems to improve performance, what are we hoping for? What's the best we can do? Well, moral accounting gives us two aspirations. First, the code of conduct we use to define good and bad performance must be a moral one. And second, the accountability system has to hold people accountable in a moral way. These should seem familiar. They're what prevent the two types of accountability failures I mentioned before. Now, I want to emphasize that this project is specifically about the aspirations of accountants and accounting itself. So I've tried very hard to derive everything as much as possible from accounting. I don't just want to say, hey, fellow accountants, let's do better. So here are a bunch of insights from philosophy and psychology and political science, or, you know, as Jennifer Joe was alluding to in the chat, you know, there's a lot of also just a lot of, you know, social justice, equity theory, and so on. You know, I'm not saying, no, let's just import all that stuff. No, let's use accounting itself to do better than we are currently doing. So my methods and my sources are very much accounting through and through. And you can see this in the structure of the paper. Once I've defined traditional and moral accounting, I introduce the notion of a moral accounting engagement, which is much like any other accounting engagement, but of course designed to test whether the client is holding people accountable for their moral performance, not just their business performance, and whether they're doing so in a moral way. And then I offer a conceptual framework and a bunch of other principles that look like and are in large part drawn from the frameworks and principles you would see from FASB or GASB or the IMA or whatever other accounting body. So for all of this, I have tried to do as little new as possible. So what you'll be seeing today is my attempt to make the most minimal tweaks to familiar and well-accepted accounting concepts and principles, changed just enough to accommodate moral issues rather than just business issues. And that brings me to another Q&A slide. I see there have been a few comments.
You have a hand waiting from before.
James welcome. Great to see you here.
Hi, thanks. I have lots of comments. I'll just kind of focus on a couple that are related to each other. One is you don't seem to be kind of connecting your work or interested in your work in about the ethics of the accounting profession, but the ethics of how accountants do their jobs. And there are testable propositions about that for sure, but they're not all testable propositions to begin with. So that's the one thing. And this field has been around for a long time, but never really received much attention. And I'm not sure how it is exactly right now. The other thing, though, that I wanted to ask specifically about the point you're making is about ethics consulting, which was a big field in the late 80s and 90s in public accounting. And accounting firms made a lot of money on this for a short period of time before it faded away. But there are certainly a lot of ethical issues related to the practice of ethical consulting, which sounds a lot like or similar to your program about moral accounting. And one of the things about this field, I was told, is that many of the organizations who engaged firms to do ethics consulting were, most of them were concerned with only one thing, which was to have systems in place to help them avoid triple damages due to the federal sentencing guidelines. And when that disappeared, so did ethics consulting. So how about that?
Yeah, so let me take the first question first. And Tamara, I see you're here. And I may call on you to talk about your ESG study a little, which provides a somewhat more optimistic view of, I guess, ESG consulting. But first, okay, so the first part was about ethics of the profession. And a long history of this stuff, and so let me apologize first on the fact that I did. One of the things I clearly need to do in this paper is bring in more of the history and lit review. I really saw this project, at least for starters, much more as a task of just trying to mine all the concepts and principles we have out there to create a framework kind of de novo, kind of, I didn't want to be too tied to, oh, here's what people did, the usual academic approach of, oh, these people have tried this and I'm going to tweak it. I really just wanted to build something as much as possible from scratch and just see where it led me. And now the next task is going to be to tie this more into the existing literature and what we know theoretically and empirically and all that. On the ethical standards of accountants, this is, and by the way, just so you all know, James sent me a very thoughtful and a lengthy set of comments, and this was included in them along the lines of, to paraphrase, well, people have enough trouble trusting accountants to do financial audits. Who's going to trust them to do moral audits or something like that? And I'll just say, I don't see accountants. Remember, I really don't talk much about character, and I wouldn't say in any way that accountants have better character than other people or something. It's all about the accountability systems. It's all about the full gamut of regulations and training and practices and incentives and controls and reporting and all of that stuff that keeps accountants in line as well as we do. Just as someone early on said, how about turning this, this lens on yourself as, an editor and thinking about the accounting research moral performance? We can do the same. We could do a moral audit or, moral accounting engagement for accounting firms. And I think, it would be a very similar sort of approach to me, which is we'd be focusing on the systems that the audit firms use, not on internal character and all of that. And again, just trying to aspire for more and nibbling away at the obvious edges of immorality where we find them. The second one, and here I'm trying to do sort of a warm call for Tamara, but you're concerned about that there's just no market demand for any sort of moral engagement. And Tamara, do you want to just
well, yeah, I have a project right now that we're revising for RAST, and things, hopefully things will pan out. But it shows that the audit firms, their non-audit service fees after periods of heightened reputation taint. So there's a bad news event, ESG related news event. It shows that non-audit service fees go up. And when that happens, that also leads to future firm value, 3 year out, different measures of future firm value and future ESG reputation. And in doing that project, I've had to spend a lot of time looking at ESG disclosures and stuff like that. And the firms are really expanding their market share in this assurance, these non-audit services. And it does raise a lot of independence issues, as have been raised in the past, but that's how we are proceeding. In terms of the trust, it does seem that the market does seem to trust these, like our additional analyses show that the effect is stronger for institutional investor, or when there's institutional investor ownership and things like that. So my personal view is that accountants may not be that great, but they're the best we have right now. And I'll turn it back over to Rob.
Yep. James, do you want to follow up?
Sure. Well, times do change and so on. I guess one issue that I suppose Tamara is looking at is the possible issue of greenwashing, of hiring firms to make their clients look better. But the other part is one way to link the 2 points I was making. There are other ways of doing it, but one way is if it was true then, and to the extent it's true now, that clients are seeking these engagements to be done just to make them look good or to escape consequences. What's the accountant's moral, I guess, standing in this? If you had a client who you decided was having an ESG consult done in order to make them look good, but they didn't really want to change things. What's your responsibility about taking on that engagement or not?
No,
it's something really can't, it's an issue that can't be escaped, really. And it's not again, another aspect of what I was saying, that's not a testable issue. That's an issue that accountants have to face. And whether a code of morality, a code of conduct will address that adequately is kind of another issue. But the basic point is that the practice of moral accounting is a moral endeavor and raises its own issues.
Mm-hmm. Yeah, thanks. That's a really useful insight. Just a partial response now. One thing that I've been thinking about is, normally, right, in the profession, we think of the, in auditing, the, right, so it gets a little murky. Who is actually paying the auditor, right? In principle, the idea is that it's investors who are paying the auditor, and the target of the analysis is the firm. And it gets murky because the money is all, right? It's difficult really to distinguish investors from management in many ways. In a moral accounting engagement, though, you can make a much clearer separation. So let's say, just for example, I'm concerned about something like a police department, and the police officers are using excessive violence. That's the moral accountability failure I'm concerned about. Well, you don't have to have the police department be the one requesting the audit. It could be some civil rights organization or another type of non-governmental organization who's saying, hey, we want to understand what's going on here and what, why this is happening and what we can do about it. And in a lot of cases, there are sufficient, public sources of data that we may not even need a whole lot of cooperation from the target of the engagement, which can be funded by an outside party. And that's one way to get around this, I guess this sounds, James, a little bit like, the market for excuses or something like that, you're basically just selling a way for people to avoid accountability, justify inappropriately why they're doing what they're doing, and making the accountants collaborators in that conspiracy. And that's always an issue. I'll definitely have to think more about that, but separating who pays from who's being evaluated is one way to do this. Let's see. Oh, it looks like I have mistakenly gone ahead in slides, but maybe that's a signal. I don't see other hands right now, so I will move on to the next topic, which we've started addressing a little, and actually I should keep my eye on the time here. So let's talk about morality. One of the trickiest aspects of moral accounting is that I don't want to claim that accountants are experts on what's moral. We need to rely on the people who are. But this is familiar territory for us. Accountants aren't experts on what it takes to run a successful business. That's what business people do. But we work with them by imposing some structure on how we talk about business performance, and to make sure that that structure works well with the accountability systems that we are experts in. So I want to do the same thing for moral performance. And what I'm going to say is we are all stewards acting on behalf of society. This doesn't demand one particular moral view over another. But it, well, actually, yeah, let me say there is one moral view that I cannot accommodate in moral accounting. And that's what philosophers call pure moral subjectivism. That's the idea that everyone's morality is entirely their own, and no one can tell anyone else what they should or shouldn't do. Ayn Rand's philosophy is one of the more famous examples. But I'm not too worried about the moral subjectivists for several reasons. First, they basically reject the notion of moral accountability or even accountability in general in the first place, if no one can tell anyone else what's right and wrong. So I'm never going to win them over. Second, and related, this is a very extreme view. The late Mary Midgley wrote a withering critique of subjectivism that I quote in this slide, arguing that they allow for no shared wishes, principles, aspirations, or ideals. She also points out that there really aren't any pure moral subjectivists, because as soon as someone like Ayn Rand writes that this is how you should be, they're rejecting their own cause. So I am, other than that, though, I have yet to find a moral approach that can't be accommodated by this notion that everyone is a steward acting on behalf of society. And the great thing about the stewardship view is that it fits so well with the accounting we already know so well. If we want to analyze someone's moral performance, we can ask pretty much the same questions as we do in traditional accounting. How did they use their assets, the assets society entrusted to them, their rights, their capacities, their authorities, their influence? Are they living up to their obligations, their liabilities to do certain things, restrictions against doing certain other things, paying debts to society for their past misbehavior? And finally, are they using the assets left over to serve society? This last part makes moral bookkeeping like nonprofit bookkeeping, which is appropriate for a steward. In for-profit accounting, net assets become equity. If you have assets after dealing with all the other, obligations, you can do whatever you want with them. But if you're a steward, that's not true. And so, I've been thinking with the example of what if someone takes their excess wealth to buy up a bunch of COVID vaccines just to burn them in a parking lot? Is that actually moral? I think most people would say it is not. So net assets, as in a nonprofit, are balanced by a general obligation to serve society. Just like in a nonprofit, net assets result in an obligation to fulfill the mission. Once we have the balance sheet, we can also create a moral income statement, or since a steward is a nonprofit, a statement of moral activities. Moral revenue, like financial revenue, is what we get from living up to our ongoing and central obligations to the people who count on us most, our customers. Revenue comes with costs, either because we're using up assets or incurring more obligations, and you can also have moral gains and losses from incidental activities. I walked through these financial statements partly to underscore the big point, which is that moral accounting isn't that different from traditional accounting. We can analyze these books to evaluate moral stewardship just like we do for financial stewardship. And I still believe I haven't said anything that embraces one moral perspective over another, because I haven't said anything about how society recognizes assets and obligations. I see some questions on measurement in dollars. I'm gonna, and the costs of revenue different from social debts. I'll address those in the Q&A, because first I just want to walk you through the map. This is the set of 7 moral accountability principles that, if upheld, guarantee that people are held morally accountable in a moral way. So if you think about something controversial like the prosecutions and other sanctions related to the killing of George Floyd, We may disagree on any number of things about that controversial situation, but I'm pretty sure we can agree on 7 points. And I'm going to start with the 4 in the middle, in the green box. First, we should hold the right people accountable and hold them accountable under the right standards. We should hold them accountable to the right extent and on the right basis, by which I mean our response should reflect the assets the parties had to work with and the obligations they faced that came with those assets. If anyone wants to argue that we should hold the wrong parties accountable under the wrong standards or to the wrong extent or on the wrong basis, you know, I definitely want to hear from you in the Q&A. Now, how do you make sure those 4 principles in the middle of the map are upheld? You need to exercise good judgment, which, if you look across a range of accounting standards, boil down to having good knowledge, like you would get by conducting a good analytical review and gathering data from well-planned substantive testing, and also demonstrating what I will call the accounting virtues: expertise, independence, professional skepticism, and so on. I mean, these are just basic auditing principles, and I just don't think many people are going to say, no, Rob, we should hold people accountable with poor judgment. Okay? Now, for some people, it just isn't feasible for them to be knowledgeable, expert, or independent, or it might just be that no one trusts them to be so, you know, the whole appearance and reality of independence. So we need parties to be held accountable by the right people. This is called the subsidiarity principle, and is basically a version of decentralization. Give the job to the people in the best position to do it well. Finally, we get to the principle of effectiveness. And here I want to emphasize that accountability sounds like it means punishment, but it's more forward-looking than that. In accounting, moral or otherwise, we want to encourage good performance and discourage bad performance. And if you get the other 6 principles right, you'll be well on your way to effectiveness, right? If people know they will be held accountable well, they will behave well. And so it's really, effectiveness is much more about prevention than response. The other thing I want to mention about effectiveness is that if you think about traditional accounting and how we should hold people accountable, effectiveness is really the only thing that comes up. You know, read a managerial accounting book. And it's all about holding people accountable effectively. So it's the other 6 that are guaranteeing that we're holding people accountable in a moral way. Now, I'm not the only one to claim I've found some universal moral principles. Oliver Curry, an anthropologist, also has a set, which he derived from the biology of cooperation. And he's tested their universality by using a database compiled by Yale called HRAF. It's a Human Relations Area Files. It documents the norms and customs and practices of 60 cultures around the world that are sufficiently well understood and sufficiently independent from one another. And he goes through this database showing that basically every culture supports his principles of cooperation and finds virtually no statements opposing them. So Tamara Lambert, Marietta Pecheva, and I have been looking into doing something similar for the 7 principles in the map. This is a big project because it involves coding thousands of documents. If you are interested in collaborating, please let me know. I want to close this section by just sharing a little empirical data that provides indirect evidence of universality, and specifically that when you get people to think about accountability practices rather than the behavior you're trying to shape, it actually reduces bias. And so what we did is we presented 7 scenarios to a representative sample of 1,000 US residents. Each one of these scenarios involved someone cooking fish in an office kitchen. For half the respondents, the person behaving badly was named Tom, which is a familiar American name. But for the other half, they were named Yavor, a distinctly foreign name. And our thought was that those who don't feel kindly to foreigners would view Yavor as behaving worse than Tom. It's basically some sort of affiliation or outgroup bias. We also manipulated the role Tom or Yavor was playing. For half the subject, the bad action was really bad stewardship. Someone was actually cooking fish and smelling up the kitchen, and we're asking people to evaluate their behavior. But for the other half of subjects, the bad action was bad governance, was holding someone accountable in a bad way, and that led someone else to smell up the kitchen by cooking fish. And what we found was that people who, by other measures, don't look kindly on foreigners did indeed see Yavor as behaving worse than Tom when the problem was bad stewardship. But when the problem was bad governance, the bias went away. So this is just some early evidence that bias doesn't contaminate evaluations of accountability practices as much as evaluations of stewardship, which is a little encouraging for the argument that we can have productive conversations and come to consensus on the outcome of a moral accountability engagement, because it focuses so much on accountability and on the principles of the map. And that brings us to the, whoops, went too far, to the end of this section. We had some questions. Sudipta, I think, oh wow, now I really have to scroll back a bit. But 2 questions on bookkeeping, one from Sudipta Basu and one from Eileen Taylor. From Sudipta, what are the units of measurement in bookkeeping, dollars or something else? Yeah, this is something where for right now I am punting. I am going to talk a little bit in the next section where I'm going to address the famous trolley problem and just apply accounting to it. And what I'm going to show there is that we can really make a lot of headway without tacking numbers on to everything. One of the things I've been thinking about is, again, right, this is all just hardcore accounting. I'm trying not to bring in too much else. And one of the big things in accounting is that recognition is distinct from measurement. So the problem, mostly what I've been talking about so far is recognition, and only bring measurement in, right? How big is an asset or a liability as necessary. I think, I have run through a whole bunch of different case studies. I actually had a class back in July. I had my executive MBA students conduct mini moral accounting engagements. And it turns out you can make a lot of progress just listing assets and obligations and then prioritizing which are more or less important and not get into numbers too much. Now, Eileen's, how are costs of revenue different from social debts? Here I have only really begun the, sort of the listing of all the different elements of moral financial statements. But the way I think about it is that, let's start with moral revenue, by the way, because I just mentioned priorities. And I just want to say, right, just as in a business, we are very concerned about a business that has deferred revenue, obligations to serve their customers that are ongoing and central to the organization. We would be very concerned if they weren't living up to those obligations. And it's the same in moral accounting. If you can identify, and here I think about something like you know, if you have someone, you know, if, oh, let's see, you know what, I'm going to hold off on this a little bit till we get to the trolley problem. And so I'm just going to then talk about costs of revenue as you're living up to those obligations. Then, you know, maybe you're asking for favors, right? You have promised to do something, now you can't. To live up to that obligation, you ask a favor, which means now you owe that person. That would be a cost of revenue. Whereas a social debt would be, you know, just flipping the words around, I'm just playing off the common phrase that someone owes a debt to society, right? You murder someone, you steal, society views you as having a debt, which you might be, you know, you might discharge by spending some time incarcerated. You might, you know, do community service. You might just apologize. But there is some debt to society, and that's what I mean by social debt.
Robert, is that like, I mean, could that be paid with taxes? Do you talk about taxes as a payment for participating in a society?
Yeah, so I would say, yeah, thanks. And who's, oh, that was Eileen. Yeah, so taxes are clearly, right, so, you know, are they a financial obligation? Are they a moral obligation? Again, to my point, there's really not that much difference. You know, back in ancient Babylonia, 10,000 years ago, which is our first evidence of an accounting receipt in the form of a clay token, they didn't use the term taxes. They were tributes to the gods. And so, you know, it is definitely an obligation that comes, like all obligations. And let me just talk about briefly, the social recognition principle is that it is society that determines our obligations. We don't determine it. The people we owe don't determine it. It is society, and that causes challenges that we'll get to. But society says we have an obligation to pay taxes, and in fact, it says for the, you know, certainly in the U.S., there's been a long tradition of those with greater assets, and, you know, we mostly do it by income, but the idea is those who can, we believe, owe more, and that's been undone over the last few decades somewhat. And in some cases reversed, and a lot of people think that's immoral, and now it's going back. But, you know, I think, yeah, absolutely, that is an obligation. You know, but it's a balance sheet issue, right? Paying your taxes is just discharging your obligation, yeah, to society. So, okay, looks like I'm not seeing other questions. I don't see hands. So I will press onward to the trolley problem. Okay, so my guess is lots of you know Philippa Foot's famous trolley problem. This is a simple thought experiment that has captured the attention of moral philosophers and the general public. If you watch the TV show The Good Place, they have an episode on the trolley problem. And I'm going to argue that for a moral accountant, the trolley problem is tremendously simplified. So there are lots of versions, but here's the simplest one. Oh, and I'm just going to focus on case one. There's a runaway trolley car barreling down a track, and there are 5 people on the track. There's a guy named Joe who's manning a switch. If Joe does nothing, those 5 people get run over and die. But if Joe pulls the switch, only 1 person dies. And so the way Philippa Foot presents this, and the way almost everyone talks about it, is what should Joe do? Moral accounting is going to give us a different focus. We're going to ask, how should we hold Joe morally accountable for what he does? So do we reward him for pulling the switch and punish him for doing nothing, or do we do it the other way around? So the map forces us to hold Joe accountable in proportion to moral performance and to evaluate that performance on the right basis, which is Joe's moral books. So let's take a look at Joe's moral balance sheet. He's got one asset. He has the ability to throw the switch or not. That asset is balanced by two liabilities, right? An obligation to save the 5 lives on one track and an obligation to save the 1 life on the other track. And, you know, if that were it, if it were just those two liabilities, no one would be arguing about this, because pretty much everyone says it's better to save 5 lives than 1. But there's also a restriction that a lot of people think is very important, that Joe should not use his asset, the ability to throw that switch, to intentionally kill someone. Okay, so for the moral philosopher, this becomes trickier, right? Is it okay to save 5, or really, right, you're going to save a net of 4 lives, but you've intentionally killed someone, right? You're right. That's why people talk about this so much. But for the moral accountant, this is much easier, because the map forces accountability to be proportional to performance. And whatever Joe does, his performance as a steward hardly changes, because he has almost no assets. All he can do is flip a switch. But he has 2 big pressing liabilities for sure that he can't both live up to. He can't save 5 and save 1. And he also has this restriction not to use his asset to kill someone, which a lot of people feel very strongly about. However we prioritize these claims, we know Joe cannot live up to all of them. He can't fulfill all his, you know, right? His assets are huge. Sorry, his liabilities are huge, his assets are tiny. He has no net assets left over to be balanced by general obligations. That would have to go negative. So, right, what do we do in traditional accounting when a firm is in a situation like this? We reprioritize all the claims, right? We decide which ones should Joe actually settle first, and then we write off the ones that won't be settled. And that's what we do in moral accounting as well. Now, we might disagree on which claim gets priority, right? Is it the save more lives, or is it the don't kill? But it really doesn't matter how we settle that moral dilemma, because we just can't reward or punish Joe much at all based on his moral performance if we want to be moral ourselves. So sure, it's a life or death situation, but with no assets and huge claims, who could possibly perform well there? So the moral accounting analysis supports the critics of the trolley problem. There's a great article by Renix and Robinson, and I think, yeah, I have the link in the slides, but they say, if I am forced against my will into a situation where people will die, and I have no ability to stop it, how is my choice a moral choice between meaningfully different options, as opposed to a horror show I've just been thrust into, in which I have no more meaningful agency at all? And I think that view fits very well with moral accounting. So now what do we do? Well, remember, our real focus is on judging the morality of the accountability system. It's not about judging Joe. So we have a whole bunch of questions now we can ask about the system that put Joe in this horror show in the first place. Why didn't someone create reports that would warn people a trolley was coming and warn the trolley driver that there were people on the tracks? Why didn't they create incentives that would punish people for being on the tracks and reward maintenance staff for keeping the trolley's brakes working, right? Why didn't they have controls that would make it hard for people to get on the tracks when trolleys are coming, and easy for the driver to avoid them? Now, you might say I'm just giving up on the trolley problem and dealing with a different and easier one. But my point is, that's why moral accounting is helpful. It focuses on the systems that encourage good and bad, good behavior and discourage bad behavior. And that's how we make the world a better place. right? We're still going to face tough ethical questions, right? Maybe we have a lousy system because someone was willing to risk lives to save money. Or it might be someone just didn't know how to design an effective accountability system. But I'm going to say, look, in the map, that is a moral failing and a big one. Even if we all agree on what's good and what's bad, we still need to be good accountants or hire them to make the world a better place. I'm going to go to questions now. And first, I want to go back. I put Eileen off for just a little bit on the question of moral revenue. And so I just want to say something. Oh, and I do need to look at the time here. I want to say something quick about moral revenue, because Philippa Foote, in the paper that has the trolley problem, she has an sort of structurally identical problem. But in this case, it's a judge or a magistrate who basically has the choice that they could frame one person to, it's like people are complaining about something that happened in society, so they kidnap 5 innocent people and say, we are going to kill you unless you find this person guilty. And the magistrate says, right, how bad is it if they basically convict an innocent person, condemn them to death to save the 5 other innocent people? And you know what? While a lot of people are comfortable with Joe manning the switch to be, for him to pull the switch and intentionally kill one to save the other 5, almost no one supports the judge framing an innocent person to save 5 other innocent people. And I'm going to argue that's because in the case of the judge, it's really it's a revenue obligation, right? It is core and central to his role in society that he judge fairly. And so to violate that obligation is a much more serious matter than for someone who's just manning a switch to kill the one. And with that, let's see, we only have 15 minutes left. So I'm no doubt you guys are all sort of at this point, it's like, oh my God, is he still talking? So I understand. I'm going to press on to the last and for me, still far most challenging aspect of moral accounting, and that's grappling with groups, societies, and entities. So this causes no end of conflict and confusion, that the world is divided into groups, societies, and entities. The real world is, and moral accounting reflects that. So first, let's talk about a group. A group is just a collection of people that share some common feature. Psychologists measure group identities using what's called the interconnectedness of self and other scale, or the iOS. Sorry to you Apple users, you're going to be confused. You show someone an image like what is on the screen here, and you ask them, you say, okay, self refers to you, and this time the other circle refers to, oh, I don't know, women or Sikhs or immigrants or left-handed people, and you ask them to choose the pair of circles that best captures their relationship to that group. So if they choose the pair that isn't overlapping at all, they see themselves as part of a very different group. And if they choose the mostly overlapping ones, they see themselves as similar and interconnected. There's an interesting tweak to the iOS, which asks not about connectedness or relationship, but about communal coping, basically getting at the question, is this problem, my problem is separate from their problem, or is it our problem? I put in a link to that paper because I think that's really pretty interesting. It's called the communal coping idea, and it's a useful one for talking about society, because remember, a society, or actually, I shouldn't say remember, I define a society as a group of people who share a common mission. So for example, this Zoom room is a group because we share the feature that we're all here. And we're also society of a rather minimal sort because we share the mission of wanting to have a productive conversation about moral accounting. And that's enough of a shared mission to create some social recognition standards about who has what assets and what obligations come with those assets. So I've been given a lot of assets here, the power to share my screen and hold the floor, and that comes with the obligation to deliver a good talk and so on. You have the power to unmute and speak up or to write in chat. And, that's not as much power, but it still comes with the obligation to say something productive, to not insult people, and so on. And this is the heart of the social recognition principle, which says that it's this society, it's not me, and it's not you, it's this society who determines what has assets, who has assets, and what obligations come with those. Now, to make this even more difficult, we're also members of other societies. My host, and presumably many of you, are part of Egyptian society, which imposes its own obligations, and some of those are quite different from the obligations imposed on me by American society, and some of us are parts of religious societies that impose yet other obligations. So, going back to the point I was making very early on, while the map, right, the moral accountability principles are universal, its application has to be local. And we'll always have this problem of convergence, as FASB and IASB call it, when people from different societies come together, even temporarily. And so there are, things to think about who gets to speak when, and, right, hierarchies and status and all of that, very different views across society that we need to come together and bridge here in this room today. We also have a lot of groups represented here that do not constitute societies. They just reflect shared features, not shared missions. And all too often, people are held accountable differently because of the group they belong to. And I say all too often because this violates the entity principle, which is that you have to hold the right parties accountable. Just like the entity principle in financial reporting, this one rests on the power to direct activities. We can hold a group accountable if they are connected by an internal accountability system that shapes the performance being evaluated. If they are not connected by such a system, we can't distribute accountability that way. So for example, I speak as a left-handed person, right? We can't hold all left-handed people accountable as a group because left-handers don't have an accountability system we use to direct our collective behavior. But if a group of people form the left-handers advocacy group, then we can hold them accountable as an organization because they're an entity. They'll surely have an internal accountability system that guides what that organization does. And so it meets the threshold for being an accountable entity, okay? We might even hold one person accountable for the organization's behavior if they had a direct hand in shaping the group's behavior. And actually, wait, just I didn't write this in the slide, but I just want to emphasize this, because it goes back to Jennifer's question very early on about social justice and equity. A lot of times what we are complaining about when we're concerned about civil rights violations, social justice, injustice, and inequity is that groups that are not entities are still being used as a basis for accountability, right? So, I'll just talk about what's been going on just recently in the US with anti-Asian violence. It's basically, oh, well, some Asian person across the world started this pandemic, so I'm going to punch you in the face. Holding them accountable, even though there's really no entity justification there. What makes this especially tricky is coming back to, well, actually, before I talk about what's tricky, I just want to circle back to my early call for aspiration. And I'm going to put some limits on what we can aspire to. Because as I've said now a few times, while the principles of the map are universal, the application has to be local. Different societies treat groups in very different ways when it comes to recognizing assets and obligations. So I talked before about Yale's cross-cultural HRAF database, human relation area files. And you can, I've seen this very easily, right? There's one society where women are given the power to find another husband if their current husband doesn't provide them with enough salt. And then there's another society where women are effectively slaves, first owned by their fathers and then their husbands or their brothers. What does this mean for moral accounting? Well, this takes us back to this notion of moral relativism. Could it actually be moral to treat women as free and, having the power to remarry in one society and treat them as slaves in another? Right, some say this is fine, others say there's only one morality out there and we need to figure out what it is. I'm still struggling to figure out exactly what moral accounting says here, but I think the best way is to think in terms of localism and subsidiarity. Again, the subsidiarity principle is if you can't uphold the other principles of the map as well as someone else, then you have to let that other person handle that task. And I think it's really tough for moral accountants to have the judgment to evaluate how women should be treated in a society that we don't understand. And so I think that part of what we need to do is limit ourselves to documenting the social recognition standards the society actually has, and then work around the edges. Now, and we still have a lot of power to make society a bit more moral. So here's a famous quote about, the sculptor, right? How do you carve a sculpture of an elephant? Well, you chip away everything that doesn't look like an elephant. And I think moral accounting is somewhat like that as well. Activists can do a whole lot of work out there, and they can try to change attitudes based on gender, ethnicity, religion, and so on. And there are civil rights organizations that can do that activism. I don't think that's what moral accountants are in a position to do. But I do think that one of the things we can do is work with the ethicists, the moral philosophers, to make a really important distinction, which is that sometimes we see behavior that is merely tolerated or accepted only because there's no way of stopping it. But what moral accounting really needs to focus on is what is aspirational, right? If a society truly thinks that they aspire to a setting where women can unilaterally divorce, or where women are under the control of men, if that's what they truly aspire to and they can establish that, I think we have to accept that. But often, I think very often that is not the case. And if we work closely with a society, we will be able to identify aspirations that are somewhat more universal than what we see in practice. And slowly but surely, we can encourage improvement. So I could go on, but I am going to stop here. I see it's exactly the end of our 90 minutes. I am going to stop screen sharing. And I'm glad to hang out if people want to continue the conversation. But thank you so much. It looks like there's a whole bunch of stuff in chat, which I am going to make sure that I capture so that I know what you're saying. Well, not exactly behind my back, but kind of. So anyway, thanks so much. And let's see. Zip out of everything.
Thank you very much, dear Professor Robert Bloomfield, for your contribution and your effort. It's really an excellent presentation. Thank you very much. Thank you very much. And it's all that remains for me to say is thank you, everyone that's joined us. And I thank you very much for taking the time out to present to us today, dear Professor Bloomfield. It has been really appreciated. Thank you very much.
Actually, if I can say one more thing before you cut us all off, I just want to paste in again this into chat. I have this blog if you are interested. And oh no, I didn't mean to do that. That's all the chat. So now I just doubled the length of the chat. Oh well. So, but yeah, just
Only a small bit went through.
Yep, yeah, a small bit, and it has the links. So yes, this moral accounting at blogs.cornell.edu. If you're interested, send me an email, comment on the blog. I'll probably be writing regular posts. I'm hoping to get people together who are interested in pursuing any of these opportunities. And that's it. So thanks.
Thank you very much. Thank you very much. Thank you all. Thank you. Goodbye.